you have volatility, which, we always do. And you even have a long period, almost 6 months of no movement, but you have higher highs and higher lows, a series of higher highs and higher lows. That is accumulation writ large. This is one of the great accumulation chart patterns that you will see.
Hey guys, welcome back to Everyday Finance. In this video, Mark Yusko discuss about Bitcoin and crypto. According to Mark Yusko, we have increased by 12% over the last 30 days. Remember, we have 12% in there. But because it was Moon-November, up 29% November by the way, Merry December, and then going back a year, we're up 123% additionally. The beauty of this chart is that it shows volatility, which you are aware we constantly do, and you even experienced a prolonged stretch of inactivity lasting nearly 6 months, but you still greater peaks and greater troughs. An ascending sequence of highs and lows that is one of the best accumulation chart patterns is accumulation right big that you will observe. And if you review that 1 month chart, Mark Yusko believe this is a truly beautiful thing. And this month, Mark Yusko will consider tweeted about it earlier this month. All right, so there was a US government agency who will remain anonymous apply the highest penalty on the biggest cryptocurrency exchange in a realm over which it's debatable if they had any authority. Yet they nevertheless carried it out, made the CEO resign from his position role. And this chart indicates that, well, Mark Yusko just don't care. Mark Yusko may need to get a new hashtag. Bitcoin is unaffected, even though it is in a catastrophic accumulating. And lots of things Mark Yusko discuss, so please watch the video to end. And share this video, and subscribe our channel Everyday Finance. Thanks.
It's a thing of absolute beauty. So we're up 12% in the past 30 days. So it wasn't Moonvember because it was Uptober, up 29%, but we have 12% in November. So happy December, by the way. And then over the last year, we're up 123%. And this chart is just so beautiful in that you have volatility, which, we always do. And you even have a long period, almost 6 months of no movement, but you have higher highs and higher lows, a series of higher highs and higher lows. That is accumulation writ large. This is one of the great accumulation chart patterns that you will see. And if you go back to that 1 month chart, I think it is.
Yeah, here.
That is an absolute thing of beauty. And think about it, in this month, I tweeted about this the other day. In this month, we had a U.S. government agency who shall remain nameless levy the largest fine against the largest crypto exchange in the world, of which it's questionable whether they had any jurisdiction over, but they still did it. Forced the CEO to step down from his role. And this chart says, I don't care. I just don't care. And, maybe I need a new hashtag. Bitcoin doesn't care. It is in a massive accumulation. And I said, January 8th, King's birthday. That's the day I believe the approval's going to happen.
Mark Yusko say, in my opinion, is sometimes merely the quantity of money that is in Eric Balonus's 30 trillion small boxes. These rule boxes, and more Mark Yusko believe I'm stating his last name correctly. Alun, yes indeed, and 30 trillion. There are a lot of people who, at current time, are unable to purchase Bitcoin directly. However, they frequently aren't able to purchase items like MicroStrategies or Coinbase, as they are publicly traded businesses as opposed to what you already know. UBS won't let me purchase Bitcoin or anything else. Yet when this ETF occurs, that will be a tricky time, because after that, you'll be like, well, Mark Yusko, don't have to purchase MicroStrategy. a dubious software company that has been added to a sizable Bitcoin honeypot, and Mark Yusko no longer required to pay more for Coinbase. Let's back to the Mark Yusko interview.
MicroStrategy's up closing in on 200% off the bottom. And to your point, what people, I think, miss sometimes is just the amount of money out there that is in these little boxes, these rule boxes. And there's 30 trillion by Eric Balchunis's, I think I'm saying his last name right.
Balchunis. Yeah.
Balchunis, yep. And, 30 trillion, big number, that can't at this point buy Bitcoin directly, right? But they can, in many cases, not all, buy things like, MicroStrategy or Coinbase because they're listed companies, as opposed to, UBS won't let me buy GBTC, whatever. But when this ETF happens, that's going to be a dicey period, because then it's like, well, I don't have to buy MicroStrategy, which is a questionable software business tacked on to a big honeypot of Bitcoin. And I don't have to pay a premium anymore for Coinbase. And I think Coinbase will do well because their business is going to skyrocket, right? Because they're going to do custody for these ETFs, and they're going to, get ancillary benefit. And when the institutions really come, because yes, there's an institutional bid, but it's with this many people. I mean, yeah. I'm not, and I actually have numbers to back it up because I'm still smiling and dialing and trying to get people to meet. It's crazy how many people in the institutional world are still stuck on zero. Literally zero. It's 80+% of institutions. Now, it's funny. In the surveys, I think like 74% said, oh, we have exposure. Like, well, kinda. And what they're saying is, well, we gave some money to this venture capitalist. We think they have some exposure somewhere. But, okay, fine. But that's not you making a decision to buy a digital asset for all the right reasons, right? Reason to own digital assets is very simple. Let's just talk Bitcoin, and then we can go to the others. But Bitcoin is 0.0 correlated to bonds and 0.15 correlated to stocks. Those are the two lowest correlations of any meaningful asset class, like high yield bonds, hedge funds, private equity, international stocks. If you take anything with, kind of $500 billion and up of value, you could find small things like, stamps or coins that have even lower correlation. But for a meaningful asset class, this is the least correlated of all of them. And so when you add it to a Markowitz framework, meaning, when you take cash, riskiest asset you could ever own because you lose to inflation, and you add bonds, which have more volatility, risk goes dois In fact, this is actually an interesting story. So I did a guest lecture for a buddy over at Duke. He teaches a class on risk management at Duke. And I came in, a couple things that were interesting. Not exaggerating, 90% of the class was from Asia. And so the Duke population, and maybe it's skewed. So the Duke population is probably a little bit diverse, but then there's the engineering school, which is a little less diverse. And then the people who are interested in risk management. I mean, we're talking some serious brain matter in that room. And that's not a racist statement that all Asians are bright, but these were really smart kids. And, I asked, so what is risk? First kid. And the hands like, they were up. And, volatility. Like, I know that's what the textbook says, that is risk. And Dr. Markowitz used volatility in his famous capital asset pricing model. But that's not risk, right? Risk is, total.
It is if you're leveraged.
Well, it can, again, it can be risk. It can be risky, but definitely if you have leverage, that any amount of volatility can be lethal, right? If you're 99% leveraged, 1% volatility can be lethal. But the point was that downside volatility is a better measure than total volatility, because why would you penalize something that has positive variance from a mean? And actually, Dr. Markowitz said that I would have used semi-variance, but the math would have been too hard and I wouldn't have got the Nobel Prize. And actually, I think I've told the story before. I got to have dinner with him once and I said, Dr. Markowitz, is that true? He said, of course it's true. That was $1 million prize. I wanted the prize. So yeah, I'm not going to, not get the award because I pure. I'm going to use the thing that everyone understands. So, but really it's total loss of capital, right? When you can't get to your point, if you're leveraged and you're forced to sell and you obliterate your equity and that's gone forever, you can't earn it back. Like if a stock goes down and you hold it and it comes back, that's not loss. I mean, Amazon went down 94% in 2001 and, it's much higher today if you held it. Most people didn't hold it because humans are going to human. They sell what they're about to need. But anyway, so I just thought it was interesting how people are still stuck on this idea of volatility, and volatility is your friend. So what you want are assets like Amazon, like Apple, like Microsoft, not Microsoft. I hate Microsoft. That have this high volatility, but they have long-term accretion to your portfolio. But the reason you need Bitcoin in your portfolio, and all the institutions, every single one of them is going to have it. This is the crazy thing. Every single one of them will, and I've been saying this for years, right? Get off zero. I've been saying since 2017. And all that means is, and I said 10 years, and now we're, 6 years in. So it's only 4 more years from now. You will be deemed fiduciarily irresponsible if you have zero. I'm not saying you have to have 10 or 20 or 30, but zero is the wrong number.
According to Mark Yusko, bonds and Bitcoin have a 0.0 correlation. The two lowest correlations of any type are 0.15 linked with equities, significant asset class, such as high-yield bonds or hedge funds. Private equity, you can take everything with you, even international stocks, roughly $500 billion and higher in worth. You can locate little items like stamps or even less correlated coins. But for a significant asset class, since this has the lowest correlation of all of them, include it in the riskiest asset you may possibly own is known when you take cash, according to the merits framework, due to the fact that inflation costs you. If you learn something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.